Hi, this is Paul from globaltradingsoftware.com. I'm going to walk you through the ultimate swing trading toolbox that we've got, toolbox of indicators to get in on those swing trades. We've got Elliottwave, we've got xBratAlgo, we have the Harmonic Pattern, Harmonic Pattern indicator, EMA Clouds, and then a bias indicator. We do have the false breakout stochastic and the Elliottwave oscillator as part of the Elliottwave indicator suite. So I'm going to go through a couple of examples. Target is one on the ThinkorSwim platform, then I'm going to switch to TradingView platform to go through an example there as well. I'm just going to use stocks on this particular video. I will look at other instruments in future videos. So let's get ahead. We'll talk about target first. I'm actually in this fifth wave move. I'm going to talk about that Elliottwave move first, and then we will move forward. So we are looking for this wave 4 pullback. Now the Elliottwave indicator suite measures this in various ways. So we pull back first into the red zone. This is a 75% probability. If it finds support in here, the wave 4, that we're going to hit the automated fifth wave target zone. This is going pretty well so far. Then we look at the false breakout stochastic down here. The bias indicator you'll see is actually in stochastic. A good thing about ThinkorSwim is you can actually overlay subcharts. So the bias indicator is down here, and we'll talk about that in a little while. But this wave 4 pullback, when you see on this wave 3 here, we get the yellow lines on top in the overbought zone. That denotes a strong bullish trend. Now when it pulls back against there and crosses over in the oversold zone, there's a high probability it's going to go on and go back to that overbought zone. So that's a good measurement of that. We then have the Elliottwave oscillator, and we look for that crowning and on that pullback there. This is the 4-hour on target. So in reality, we have a great pullback here as far as the Elliottwave indicator suite is concerned to trade that fifth wave. You'll see these two EMA clouds on here. Now with this 4-hour and the daily time frame, we use 55 and 89, and they're non-linear support and resistance zones. So for longs, we are looking for these pullbacks to find support either in the 55 or the 89, and this does find support in the 89, in this pink moving average here as well. So that's really good. It holds on to that and starts to move away. We do also use them for trade management. So we're in this trade now. You see the 5 and the 6 star buys here. These are xBratAlgo signals, 6 star being the highest probability trade. You can see that 6 star was printed after we was in this trade, but it gives confirmation in this instance. But also when we see the bias indicator down the bottom here, we can see green, which is bullish bias on a higher time frame, yellow is neutral, red is obviously bearish. And when we're looking for an entry here, we need our bias to be green for going longs. And you can see here on this candle, before our entry, we were green, okay? So we are looking for that long trade. So our bias backs us up, if you like. Let's just go back a little bit in time. During this bullish move, fifth wave move is a really high probability move, but also during this bullish momentum, we can use the xBrat to get in other trades. So we can see if we go back here, we get 5 and right on the left here, 5 and 6 star buys on the xBratAlgo. Our bias indicator shows us green, so we're good to go. Even if we took the 6 star at 154.64, we didn't come back, and we came back to this 55 out here for that stock to be taken out, if you like, for the little bit of profit. Or we can use a lot of the time when we're using trade management, we'll adjust those EMA clouds to 34, which would be a lot higher, and you take your profit there. We come back down, we get another 6 star buy here coming out of the 55, another great move up. This time the move doesn't actually close below the 55-day moving average. When we got this 6 star buy, bias was green down at the bottom here. We then either add to the position, or if you missed that first one, we're looking at a 6-star buy here again on the xBratAlgo. Comes down to test the EMA Cloud. Everything's behaving normally for this move. We get a 6-star buy here. Bias is green, we go long. That forms that wave 3. Then we pull back on the wave 4. Then we trade the 5th wave. So this is the continuous trading opportunities. But moreover, when we're looking at swing trading, we can also look at intraday time frames to give us that confirmation, if you like, on that wave 4, but also trading opportunities as well. So let me just open up another chart here. Okay, so to the right we have the 78 minute. Now why do I use 78 minute? I use 39, 78 and 195 a lot. Basically dissects that trading day for stocks. So I'm going to go big on this chart here to show you that this move from 199.96 at the top to down to this bottom here is that wave 4 that you saw on the 4-hour time frame. But more importantly, this auto harmonic bat pattern completes in the automated completion zone. So this is a very strong indication that the resulting trade, the bullish trade, because it's colored in green, is going to be high probability. And you can see it moves away from there really, really well. Now look what happens when I put the xBratAlgo on there. So now you're seeing a 6-star buy coming in. So we've got a confirmation of that wave 4 completing in a bat pattern. Now a harmonic pattern takes into consideration, this ABCD correction is very complex with fib retracements, fib extensions, overlaps, and to actually complete in our automated trading zone is difficult. But when it does, we have a really strong bullish resulting trade in this case because it's painted in green. Then we get this 6-star buy here on the 78. Remember, we're looking for that 5th wave entry, but intraday this is all backing us up here for really strong, so we can understand how much we're going to risk for this trade. And then obviously 189.18 is our entry, which is just above this peak after the 6-star buy. So everything's working out right. We get the entry here, and again we have that 5th wave move that we're in right now. Just restore those cells a little bit. Just go to here. So again, using that multiple time frame strategy on this, in this particular instance, has given us lots of trading opportunities using the xBrat. We've used in this instance the harmonic to basically measure the performance of that wave 4 pullback. I mean, you could have got in a little bit earlier with this 6-star buy on the 78 minute, but then ultimately we're trading that 5th wave move on target right now. So let's go to another example using the TradingView platform, and this is DFS. I'm in this trade already on the 5th wave move, but I wanted to go back in time a little bit and show you how we combine the harmonic and the xBrat for trading opportunities. So first of all, we go to the bat pattern that was formed on the daily time frame. Okay, this was completed in the automated completion zone. Remember, it's very difficult for these to do that, and when it does, that resulting bearish move was pretty phenomenal. So when you go down on a smaller time frame, you'll notice from this move down here, we won't look at it now, but there would have been xBrat signals, maybe on the hourly, the 195, the 78, the 39, to go short. Those shorts would have probably been around about 60.55, and we had the lows there of $45. So, you know, a $15 move there, which was pretty cool. Then we find support in our 55 and 89 day moving averages. Okay, this is no coincidence. We also have a little bit of a cheat sheet for our EMA clouds, depending on the time frame you're using for, just to make it easier for to use them. But you can put as many on there as you like. But 89 and 55 for this daily and the 4 hour for swing trading is hot. Okay, so then we get a 5 and 6-star buy on the xBratAlgo. Probably go long just above this pivot on the 6-star buy here at around about 58.38. We don't get a close below these EMA Clouds, look, okay, just keeps going. Then we get another 6-star buy, so we can add to our position at 61.55. And then this thing just keeps going. Remember, we're looking for a close below either the 55, which is more moderate, or a conservative trade management at the 89. It doesn't actually close below. Okay, now if we're going aggressive, remember we got in here around about $58. We get to the highs of $100 on this particular swing trade. Then we have a measured pullback here on this wave 4. Let me just get rid of that a second. I'll talk about that in a minute. We have the wave 4. It clusters around the 55-day moving average. It does close below. So if you've been quite moderate or reasonably aggressive with the trade management for those initial trades, you're probably going to be out. If you're more conservative, you're still in. This wave 4 though gives you a high probability move to go to that 5th wave target around about $107. Again, we measure the performance of that wave 4 with a couple of things. We've got the pullback zones. It's, you know, the linear pullback zone is the amber zone in this case, and that's 80% probability it's going to go on and hit that 5th wave target. So good probability move. We've got the false breakout dots on the top there on the stochastic, really strong, and then the stochastic pulls against it. So let's just make that a little bigger there. Pulls back against, crosses over in the oversold zone, and it wants to return to that main bullish trend in the overbought zone there. So the wave 4 is measured and looks good. The Elliottwave oscillator, you can see crowns, comes back down, comes down and goes back up again. So again, really, really strong. Now on the Elliottwave, on the 5th wave move, conservative entry is our 6-4 moving average high, this green moving average here. Now one little trick is a regression trend channel to also measure this profit taking pullback. Now when you select to see the Pearson's R number, we're looking for a percentage over 90%. So basically telling us that this is a orderly profit taking pullback, and that's what we need on a wave 4. This one is 92.736 blah 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 percent. So this is over the 90%. So this is a really good profit taking pullback. So we can go aggressive out of here. And I did go aggressive. So when it breaks out of this channel, it's going to go. So two things here. I want to make sure it closes outside of this channel, but then I want an entry above my 55-day EMA. Okay, so entry at 86.43. We're on this 5th wave move now. If you hadn't traded the ones before, this is your first trade. If you have and you're still in that position, and you didn't, it didn't cross the 89 EMA here, EMA Cloud, so you're still in this position. Add to your position. This is a measured pullback. The 5th wave move is a high probability move, and you're in this position again. At this moment in time, I've been quite aggressive with this particular trailing stop, so I'm actually locking in 100% profit times risk. Usually the stop is below the wave 4, which it was to begin with. Once I get a close above this 50% line, which is 88.90 there, I go risk free. Now I've had 3 closes above the 100% line, and it looks like it's running out of juice and wants to pull back. So I've chosen this time to be aggressive and lock in that profit. Remember though, if you're in this on a longer term swing, or you want to give these 55 and 89s a bit of a chance, because we're only in this trade 1, 2, 3, 4, 5 days right now. Usually swing trade on the 5th wave move takes between 7 and up to 20 days. You could move that trailing stop to around about break even inside this 55 moving average, or just below around about 83.96. You've got options, that's the thing. I've been aggressive with this one because I'm probably in about 6 financial swing trades at the moment, financial stocks, because they all pull back on a wave 4. So collectively I'm in good profit because I'm locking in profit collectively. It's like my little mini swing trading ETF for financial stocks right now, because they all pull back pretty similarly and they're all going. So just want to reiterate the power of the combination of trading tools that we've put into this swing trading toolbox. The Elliottwave indicator suite, the xBratAlgo, which is really strong, and the auto harmonic pattern. Then with the EMA clouds, we're good for entries and trailing stops, and the bias gives you that checkbox, if you like, that confirmation that you're looking for a short or a long, and you are going to go for it. So this is just two examples using multiple time frames on the ThinkorSwim version to give you that confidence of moving up, and obviously showing you those intraday as well with that harmonic pattern. The xBratAlgo gives you lots more trading opportunities, but then the big trade usually comes from that fifth wave move. So there's lots of opportunities, and it is a collection, a combination of tools that you need to continually swing trade those stocks. So that swing trading toolbox is of high value, really. Being patient, learning how to use them, combine them together is a really strong set of tools for your swing trading business.